Hey folks, it's me again with your weekly mortgage report to explain to you guys what in the world's going on with real estate and especially housing and the financing piece of this puzzle. What you're seeing on your screen right now, look at the red headlines. Dow slips more than 200 points after January CPI shows stubborn high inflation. So if you first read that, you'd be like, okay, inflation just spiked again. Let's really go into those details because you gotta look at this. Most of this is advertising, and that all of a sudden just went away. So glad we caught that on the screen. So let's get over to the real data that we're seeing right now. So the data that came in today was the CPI. CPI number is a kind of a number that the Federal Reserve watches, but they don't really just basically focus in on that. They look at a number called the PCE. We'll go over that when that number comes out. But what the CPI number is consumer inflation. How much inflation or how much are things getting more expensive for me and you? Okay, those are from food, gas, housing, a whole bunch of other things. I'm going to show you where each segment went and how much it increased or maybe it turned back down. But if we break down the numbers, it's not as bad or not as I say deceiving as the headline news states. So look at the numbers that you have on your screen right now. You're going to see core CPI, CPI month over month, and core or CPI year over year. So what is CPI? Basically, like I said, CPI is a basket of goods and services, how much the price goes up or down month over month and year over year. Okay, what the core CPI number is they pull out, they strip out, they remove food and energy. Why did they do that? Well, here's why. Look how volatile the core, those two segments are. You look at here at gas services right here, gasoline, okay? Look how volatile those are. And within a month, monthly change, gas alone, gas services went up 6.7%. So if you pull that out and we just want to see the core pieces down here because, you went to work last week and you filled up your gas tank and it was $4 a gallon. Then you went a couple days later and it's $3.50 a gallon. Then you go the next couple days and it's $3.20 a gallon. Then a week later, it's $4 a gallon. It's all over the map. So they try to, take out some pieces that are really volatile. What they're working on right now is a new number, and it's called the super core CPI, and it's going to extract out the housing number, right, that you're going to see right here, because this number in the last report made up 50% of the number. Okay, so let's break it down. What we're seeing right now is the core CPI month over month was up 0.4, the expectations were 0.4, and the previous number was 0.4. So it's stagnant. I was hoping to see it come down. Then you have CPI month over month. It's not the core, it's the main CPI number. It went from 0.1 previously reading. They expected it to be 0.5. It came in at 0.5 right on the button. So now we have CPI year over year. So from last year in January to this year in January, what did prices do? Well, the previous monthly reading was 6.5. The expectations were for 6.2 and it came in at 6.4. So that's why they're saying it's up, 0.1 from what it was expected. So I'm going to take this with a grain of salt because it's not a huge miss in one way or another. And there shows stability right here. I was hoping, though, that this would continue to go down. So let's get over to see what this is doing to the markets, especially we saw in the Dow Jones was down 200 points. Now, what are we seeing with mortgage rates? We're seeing mortgage rates going up. But you're going to say, Dan, on the screen, you have a number that's going down. Okay, what you're seeing on the screen right now is a mortgage-backed security bond price, okay? The price of the bond, which you're seeing on your screen. Basically, what it does is it has an inverse relationship with the yield of this bond. So why do we care about this stuff? Well, because the yield on the bond is the biggest component of your mortgage rate. So we monitor the price of a mortgage bond to monitor and follow the yield of that bond. Okay, so that's how we do it. That's the most accurate way to do it. When you're seeing a number on your screen that's down, so that means the prices of this bond is going down, the price has an inverse relationship. It means the yield or rates are going up. So when the price goes down, yields or rates go up. That's what we're seeing right now. Look where mortgage rates are. Do you remember a couple weeks ago, I did a report saying, hey, we just hit 5.99. Rates are up 0.5% within the last 2 weeks. So I think, I don't really can't figure out what's going on right now with, the huge volatility in the last week or two because inflation numbers are coming in good. But I think liquidity in the bond market is really making things suffer right now. And that's because there's over too many bonds out there in the market right now to be absorbed from investors. So we're seeing prices basically dropping to bring in more investors, and they're requiring higher yields. So that's what you're seeing right now. So if you're in the market for a home, you think this might be a good year for you to get into a home, we would love to help you. My name is Dan Frio. I'm the head of the Frio team. We are mortgage advisors all over the country as well as Puerto Rico. So if you're in need of a mortgage and you're like, hey, we're confused, we really don't know what steps we need to take to get our first house, maybe how do you get pre-approved? Check out a lot of other videos that I do. How do you get a reverse mortgage? Is it a good thing? Is it a bad thing? I heard you have to give your house away. We answer all these questions. And don't forget on Wednesdays, every Wednesday at 8 p.m. Eastern time, we have a live event, me and Kyle Seagraves of Win the House You Love. We have a live event. We're on there for about 2 hours answering all the questions that you have. So don't forget to join us on Wednesdays. Love to see you then. But otherwise, thanks for watching my video. If you please would do me 3 things, just 3 things I ask you. Give me a thumbs up, subscribe down below, and hit the bell. Every time I post a video, you get an alert. Thanks for watching, guys. God bless. See you next time. Bye-bye.